Okay, hello. Can you hear me, Lichu?
Yeah, I can now.
All right. Okay, good evening, everybody. And thank you for joining us tonight and welcome to Investors Kopitime on Sunday at 8 p.m. Joining us today is Lichu from Afin Huang Asset Management. So she'll be doing most of the talking today. She has a presentation on how you can define strategies or develop strategies in any market conditions, right? Especially in an instrument which Li Chu is basically going to share with you in a short while because Afin Huang Asset Management is going to launch two more new ETFs this week. So stay tuned, and I'm just going to let Li Chu present most of the thing. But most importantly is whatever that is being shared here today is basically for informational and educational purposes. This is not intended as any investment advice. All right. So, Lichu, I believe that you have a presentation for us, right?
Yep, I do actually.
All right.
Yep. Shall I share
So,
my screen now or?
yeah, you can share your screen now. And while she's sharing the screen, if you have any questions at all, you can post the questions there. Once Lichu has finished the presentation, then we will take up your questions. All right. Okay, Lichu, it's all over to you.
Okay, thanks, Penny. Can you guys see my slide?
Yes.
Okay, cool. Very good evening, ladies and gentlemen. It's good to be back in Equities Trackers Investors Kopitime. I think today I just want to talk about the two new funds or two new ETFs that we are listing next week. And I thought that this is an exciting strategy that I could share with some of you as, educational, whether or not, this fits you or fits into your portfolio and suits you. I think that is, I leave it up to you to decide. Okay. So before I begin, maybe just want to have a little bit of interaction with you guys. Perhaps you can comment in the comment section. How many of you have actually heard of smart beta strategies? Smart beta strategy in ETFs. These are strategies that have already existed in the US and some of the other more developed countries. So if you have heard of it, maybe you can type one, okay, in the comment section. So while waiting for your response, very briefly, as with all my slides, I will go through a very brief introduction on what is an exchange traded fund or ETF. The reason for this is ETFs is not that popular in Malaysia, and I don't know how many of you here, have joined, have actually attended any of the ETF talk that Afin Huang has conducted. But if it's your first time here and you don't understand about ETF, this is a brief introduction for you. Okay, I'm sure all of you have heard of unit trust funds, and I'm sure all of you have heard about shares. Okay, most of you who faithfully follows Equity Tracker, I'm sure you are very well aware of what shares is, how it works, how to trade shares, etc. So ETF or exchange traded fund is actually a hybrid product that is a cross between unit trust fund as well as shares. So the only difference, I'm sure you know that unit trust funds is a portfolio of stocks, but the fund manager is the one that decides what stocks to pick for you. Whereas if you invest directly in the share market, you will be the one managing your portfolio. You will be the one deciding on what shares to put in. So ETF is actually a basket of shares or a portfolio of shares, or it could be bonds or commodities, just like a unit trust fund. But the main difference here is that ETFs are passive investment. Why do we say passive? Because in the unit trust world or in the unit trust fund setup, the fund manager actually actively monitors the investments and decides to get in and out of the share market for your benefit, right? Whereas for an ETF, it is usually an index tracker. So we just track a particular index, okay? I'm sure all of you know what FBM-KLCI is. FBM-KLCI, is an index that tracks the top, the largest 30 companies in Malaysia by market cap or their size. So if we have an ETF that tracks FBM-KLCI, essentially you are just buying the index, okay? To put it very, very simply. And the benefit of ETF is that it is put up or rather listed on the exchange for you to invest just like how you buy shares. Okay, so in terms of settlement, it's T+2, and you can also do intraday trading if assuming the ETF has a large movement within the day. Okay, so of course, ETFs, given that it is still a fund structure or setup, the fund manager actually charge management fee on the ETF management, but of course, if you compare it with unit trust, it's a lot lower. Okay, and because ETF is like unit trust, you can at any point in time increase the units in circulation. So unlike shares, where usually the issued shares is usually a fixed amount, ETF can grow or reduce in size. And this does not mean any dilution, because for any additional units, ETF units that we create in the market, it is backed by the underlying shares. Okay, so wow, let me take a look at the comment. Okay, so
Looks
some
like
of you not many people have heard. In fact, most of you have not heard of it, which is not surprising, because given that the Malaysian market, let alone the ETF, the ETF product is already not that popular, so it's quite common, or rather it's expected that you don't understand or you have not heard of the smart beta strategy, unless you've been trading ETFs in the US market very aggressively. Okay, so let me go through very briefly what the smart beta strategy is. Okay, so in a conventional index, okay, before I talk about the smart beta index, in a conventional index, usually it is the index provider. Okay, in the case of FBM-KLCI, it's FTSE. In the case of S&P 500, it's S&P. The index company will usually screen stocks for liquidity. So which means that they usually set a certain criteria. So for example, they would want the shares to be, to have a traded volume of maybe, $1 million averagely on a single day before it gets included into the index. Okay, so depending on how the index is being structured, it could cut out, the top 30 companies, top 50 companies, or the top 100 companies in terms of market cap, or in terms of their size. Okay, and usually they are market cap weighted, which means that the bigger the company in terms of market cap, the larger the weight in the index. Okay, so that is a conventional index, typically your FBM-KLCI, your S&P 500, your Hang Seng Index, etc. Okay, now smart beta index tries to combine active management, which is a fund manager's role, plus a conventional index. Okay, so how they achieve that usually is via a few steps. Okay, first of all, they will also screen for liquidity, because liquidity is important when they select the shares into the index. They can't be selecting something that is not traded at all. Okay, so after selecting stocks which has sufficient liquidity, let's say 100 stocks qualify in the universe, and what happens is that they will put on additional screeners for selected factors. So for example, the strategy could be skewed towards dividend, okay, high dividend. So what they will do is they will screen, let's say, the 100 stocks, okay, for liquidity. Let's say in this universe of 100 stocks, what they will do is they will then screen for their dividend yield. So for example, they will pull out, dividend yield of, let's say, Top Glove, dividend yield of Public Bank, dividend yield of Maybank. And when they have those dividend yield, the index provider can then choose to tilt the weightage of the stocks component as according to the dividend yield instead of the market cap. Okay, so these are example of a smart beta index, which means that it is not your conventional index. The reason for that is to select or to customize a portfolio which has high dividend yield to investors. Okay, ultimately, this process, even though there is an additional layer of this smart beta, so-called, that they add on to the index, but essentially this the rebalancing or the changes of this constituents in the index does not happen on a daily basis, like a unit trust fund. Okay, so it can be then weighted based on market cap. It could also be weighted based, equally. It doesn't matter what, how big the company is. They will just give a fixed percentage to it. Or it could be factor tilted. Factor tilted means like the example that I gave you just now. If let's say public bank has got a high dividend, it gets a higher weightage because it has a higher dividend yield. Okay, hope I am clear on this. Okay, if you don't understand, go ahead and ask the questions in the comment section. We can address that later. Okay, so one of the ETF which we're listing next week is called the TradePlus DWA Malaysia Momentum Tracker. Okay, first of all, why invest in momentum? Okay, a momentum strategy basically demonstrates a strong relative return. Okay, if you are willing to embrace higher volatility. Okay, we know that what is the hottest in the market these days? Glove stocks, right? Healthcare sector. So these are stocks, or these are counters or sectors that have high momentum as at the current moment. Okay, and the reason why we want to introduce or bring this momentum factor ETF into the Malaysian market is because if you take a look at this chart which I've taken from MSCI, that shows that in the MSCI World Index, over a long term, you see that the MSCI World Momentum Strategy actually outperforms most of the other strategy. Okay, whether it's value, whether it's high dividend or minimum volatility, or even the plain MSCI World Index, it has outperformed it. Okay, and this index, so I'm now going to talk about the index because when you are investing in ETF, you are essentially buying the index. Okay, so unlike you assessing whether you should invest into a unit trust fund or not, it depends on the skill of the fund manager or the fund house, right? But in ETFs, it is all about buying the index or getting access to the index. So it is very important for you to understand how this index is being constructed in the first place. Okay, so what exactly is this Dorsey Wright Technical Leaders Malaysia Index? This index is actually owned and developed by the Nasdaq Dorsey Wright team. Okay, and they are actually an expert in the point and figure methodology. Okay, so this gets a little bit technical because this team in Nasdaq actually how would I put it? They will actually pick stocks to be included into the index using the point and figure methodology. Okay, if you are into technical analysis, you would know what point and figure is, and some of you actually do like using point and figure charting. Okay, and if you take a look at the historical model of this particular index that Nasdaq has back tested versus the MSCI Malaysia Total Return Index. The MSCI Malaysia Index is more or less equivalent to your FBM-KLCI Index. And if you take a look at the returns, the model that this index was back tested since 2005, you see, superb outperformance. Okay, so it is as good as you buying into an actively managed fund, but yet this product is passive. Okay, I hope I'm not confusing you guys. Passive, when we talk about passive, it just simply means that we don't look at the stocks that we own on a daily basis. It is usually tracking a particular index, and the rebalancing doesn't happen that often. Okay, but the fact that we are overlaying it with the point and figure charting to pick stocks that has high momentum, that part is called active. So which is why we say that smart beta strategy is about combining active and passive, so bringing the best of both worlds. So if we take a look at this calendar year return of this particular index, you will see that out of the 15 years that they have back tested this index, there is only 1 year of underperformance, which is in 2018. And we know that 2018 was the election year. And as a result of it, there was a change in government. And because of that change in government, the momentum in the stock market is rather weak. Okay, and that is also the reason why there is a huge underperformance in that particular year. Okay, and in fact, if you take a look at the negative returns out of this years, only 2008 and 2018 has negative performance. Okay, but of course, year to date, it is still up a little, but we don't know whether it's going to end up ending the year up or down. Okay, so this is not a strategy, that we pluck out from the sky and got Nasdaq to run. It is an existing strategy that they already have. And this particular ETF, the Invesco DWA Momentum ETF, is an ETF that tracks the Nasdaq Stoxy REITs index in the US market. Okay, so if you compare this with the S&P 500 ETF, as you can see, the blue line is the Invesco DWA Momentum ETF performance. Since they launched in 2008, it has significantly outperformed the S&P 500 ETF. Okay, so of course, do note that although the outperformance is significant, the volatility of this ETF is generally higher as well, which means the swing movement of this ETF could be a lot larger than a conventional index. Okay, so let's understand a little bit on how the stocks are being selected by Nasdaq. So first of all, this Nasdaq will look at the stocks that is in their Nasdaq Malaysia index. Okay, that is the parent index. This is equivalent, more or less equivalent to your FBM-KLCI top 100 index. Okay, so how they select, how they determine stocks to be included in the Nasdaq Malaysia index is they are stocks that has a minimum market cap of $150 million. Okay, so that's like about 500 million ringgit. They're about actually 600, sorry, should be 700 million ringgit in terms of market cap. So these are not your small caps. Okay, so small caps are all being filtered out. These are the larger cap companies. Okay, and the companies must also have a minimum 3-month average daily turnover of $100,000. Okay, so another 420,000 ringgit equivalent daily trading volume. So this is to ensure that the stocks are liquid enough. Okay, step number 2, after identifying the companies that is within this Nasdaq Malaysia index, they will then screen for stocks that has a minimum average trading volume of $1 million for the past 30 days. Okay, so this is to screen out stocks that are very liquid in the past 30 days. So there must be high trading activity going on of minimum 4 million ringgit, 4+ million ringgit before it gets included. Okay, so it's like a funnel, right? So they start off with the bigger universe, and then they screen and filter out companies that are traded at least $1 million for the past 30 days. And then step number 3, they will then assign a momentum score using the point and figure charting. Okay, so in this case, they actually use relative strength. Okay, what do you mean by relative strength? It just means that they will take, for example, public bank stocks price versus the FBM-KLCI, or in this case, the Nasdaq Malaysia Index. Okay, if let's say public bank shares increases at a faster rate, okay, at a higher momentum than the FBM-KLCI, then it means that this particular counter, which is public bank, has got a higher momentum, okay, a relative higher momentum as compared to the FBM-KLCI. So it gets included into it gets plotted on the point and figure chart, and then there is a score, momentum score, that is tagged to public bank example. Okay, and then step number 4. After having rank or assign those momentum scores to each of the stocks that is within the universe. What happens is that they will then pick up the top 20 stocks with the highest momentum score, and then they will be all weighted equally. So regardless of whether public bank has got a higher market cap and some other companies has got a lower market cap, they will all be assigned with 5% each. Okay, so they all start with 5% weightage. Okay, every quarter the rebalancing will happen. Okay, so this is essentially how this index is being constructed. Okay, so don't worry if you feel that you are a little lost, because this is very, very new. You could always head on over later on to our website to understand more about this. Okay, now what exactly to expect in this particular index? So what it is actually a means to identify market leadership. Okay, market leadership doesn't mean political stability. Okay, market leadership simply means stocks that perform well, okay, or has high momentum. And it is also based upon an objective input. So it is just taking into account the price of the stock and basically supply and demand. Okay, and it's being measured relative to the main index. Okay, and it is then this is also designed to participate in longer term themes. So it is not meant to say screen out stocks that has very, very short lived theme, like a 1 month or even 1 week or so. Okay, and what it is not, this strategy is not a black box that tries to forecast which counter will do well or which stock will do well, and it is also not reliant upon subjective input, because like it or not, when you invest into the stock market, sometimes we have emotions that drive our decision. Whereas in this case, it is all objective inputs, just price, plotting it on point and figure charting and giving it a momentum score. Okay, and last but not least, this is not designed to target the exact top or bottom in securities. It is quite impossible to get the exact top and the bottom, so it's not designed to spot that as well. Okay, so if you take a look at the index, screening it over, this index was last rebalanced on the 30th of June. So every end of the calendar quarter, there is a rebalancing exercise that happens. Okay, so the screening goes through. The entire screening process goes through again, and then 20 stocks will be picked. And in the latest June rebalancing, these green bars are some of the 5 stocks that has been added into the portfolio, basically replacing the other 6 stocks that was taken out because they have kind of lost momentum. So if you have been looking at the stock market, Bursa, 𝐷𝐿tronic, Hibiscus, Penta, Takaful, and TM are gaining momentum as compared to IHH, Sun REIT, IGB REIT, basically the REITs. These REITs were all added, these companies were all added back in March. Don't forget, at end of March, at that point in time, we had that major crisis. And we know that the REITs did not drop as much as some of the other growth stocks. So as such, during the March rebalancing, a lot of these defensives are being added into the portfolio. Okay, and because they are all equal weighted, so you can see that there is no sector bias. It simply really depends on what particular stock has got high momentum. So if you take a look at the very, very short performance from the rebalancing date to 9th of July last week, the momentum, Malaysia momentum tracking leader index by Nasdaq has gone up by 8.2%, outperforming the FBMKLCI, which was up 5.5%. Okay, so this is a summary of the portfolio changes, and because these are momentum focus, this means that the stocks can totally change. All the 20 stocks during a rebalancing process can totally change. If let's say some other counters have actually outperformed, has gained higher momentum as compared to the previous portfolio. So just to give you an example, in March, almost 50% of the component stocks, so out of the 20 stocks that they own, 10 stocks were replaced, okay? And this is really due to, those stocks losing momentum and putting in new stocks that have gained higher momentum, okay? So some of the weights that went up during the March rebalancing was the healthcare sector, REITs, and transportation. And of course, those that were dropped out from the index in March was energy, finance, and industrial products and technology as well. So when it comes to June rebalancing, only 30% of the component stock 6 that I showed you just now was refreshed. Okay, so these were the some of the sectors that were added into the index. Technology, I think Penta was there, was added, and then finance was Bursa, telecom, energy, consumer products, and of course the weights that went down was the few shares that was being replaced. Okay, so why invest into this momentum ETF? So after giving you a very, very confusing presentation on how, or rather how complicated the stock selection process is, you don't really have to know exactly how they pick the stocks. Of course, it's good that you understand it totally. But just put it simply, this ETF or this index is to give you or to pick momentum stocks for you. Okay, so today I believe some of you, when it comes to investing, there are a few factors that will help will come into effect when you make a decision, right? First of all, you have to look at how much money you have, how much capital you have to invest, right? And out of those capital that you have, how many stocks can you buy, right? Some stocks that are good that you want to hold long term, but they could be expensive, right? Public bank is expensive, FNN is expensive and things like that. Even the healthcare, or rather the glove counter has gone up so much. Top Glove, Supermax suddenly all becomes so expensive already. So this particular strategy is for you if you are looking to diversify with a small capital, okay? Because when we list this on Wednesday, the issue price will be at $1, 1 ringgit per share. So, of course, on the listing day itself, this 1 ringgit could already fluctuate because by Monday, which is tomorrow, the fund manager, which is our company, would have already purchased the 20 stocks that is in the basket. So between Monday and Wednesday, the stock price would have moved, and therefore the portfolio value of this 20 stocks would have moved. So on Wednesday, we don't know what price it will, when we're at 9 a.m., what price it will start trading. Okay, so this is a proven stock picking strategy using point and figure charting. So for those of you who like technical analysis but have no idea how to go about it, this is a good platform for you to try out, or for you to invest in a technical analysis strategy. Okay, and you don't even have to do it yourself. Just rely on the expertise of Nasdaq. Secondly, it is affordable because we're just going to start listing it. We're going to list it at $1, and immediately with this 1 ringgit share, you already own 20 companies. Okay, and they are large, mainly the larger cap companies. Okay, and of course, diversification. It gives you a portfolio of liquid, high momentum stocks. So for those of you who are, ET's members, I know you guys are value investors, right? So value, whether it's value investing or momentum investing, all these strategies have got their cycles. Okay, sometimes value strategy works, sometimes momentum strategy works better. So it is also a good diversification strategy that you can consider. Okay, so here are some of the fun details. The benchmark of this is the Dorsey Wright Technical Leaders Malaysia Index. When it's listed, you can simply just trade it at $100, 100 units, just the standard board lot size. Of course, there is our prospectus, which is available on our website. It is advisable that you go through the content of the prospectus before you decide to invest into this product. Okay. I will stop my presentation here, Benny, and then let's take some questions before I move on to the next ETF and the next strategy.
Yes. Okay. Yeah, there are already quite a few questions coming in, like you mentioned, Lee Chu, because most of them are value investors. So the first question they basically ask is, since there will be changes like every quarter, right? You rebalance the portfolio. Will there be any dividends?
Yeah. Okay. For this particular strategy, dividend is secondary. Okay, because we're talking about momentum. Okay. Of course, there are some of the companies, if you take a look at it, they do pay quite good dividends, but they are all added into the particular ETF. Okay, so for example, FNN is one of the companies there. So when FNN pays dividend, it gets into the ETF, and then it gets into the cash portion. So we keep the cash for you. It'll be, and then the NAV value or the price of this ETF will then increase as a result of receiving these dividends from the stocks. As and when we have income, we will just keep it and accumulate it on an annual basis. We can distribute those income to investors. Okay, so but I would say that for this particular strategy, the focus is really on picking momentum, and it's more towards capturing capital growth rather than dividend.
All right. So for those, especially for traders who wants to actually build a portfolio, this is like what Lee Chu has mentioned, right? That's what she says is active, on a passive investment. That means you basically don't need to go and find the stocks which have basically price momentum, right? It's all there. And basically in that ETF, you have actually 20 counters that are moving on a momentum basis. I mean, price momentum. So that's why it's always, there's a review every quarter, because if the stocks doesn't move anymore, then they will probably select another sector which is now performing, right? So there is a question, right, by Rama Mustafa earlier, why was Supermax removed? Because Supermax is one of the momentum counters. All glove counters are going strong, right?
Yeah, I think it's quite expected, because I think if you look at Supermax prices, I think it did kind of lose its momentum towards the end of June, because the capturing or the rebalancing activity actually happens end of June. Okay, and what happened was there are other counters who outperform them. So bear in mind that this point and figure chart that Nasdaq is plotting is not over a short-term period. Okay, so it is plotted since probably 2005. So they already have a particular trend in place and a particular momentum score. Okay, so the fact that Supermax was removed, there were probably other counters that caught up in terms of momentum. I think if you take a look at Bursa, if you take a look at Penta, they have actually gained a tremendous momentum in the past, in the recent months. Yeah.
Is the underlying index available? The price information or the index, is it available where they can get the information from?
There will be, of course, if you subscribe to Bloomberg, the terminal, then you will get it there. I will need to get back to you as to where, whether they will have it on their website or not. Whether or not they will have it on, the free websites like MarketWatch, Investing.com and all, we will check with Nasdaq on that. So if possible, we will try and publish it get them to publish it at those platforms. Otherwise, this info are also available in our website. So on a daily basis, we actually make an announcement to Bursa. We will tell you what the index point is, at what point of this Nasdaq's index, and also the ETF value. Okay, so you can get it either via Bursa announcement or via our website. But if you want to plot it in the chart, then we will have to get back. I'll have to get back to you. I'll need to check with the team.
Okay, there's another question here. What about the portfolio changes? Will there be, would we have access to this information whenever there's changes in the portfolio?
Yes, of course. ETF is all about transparency. So if for all the ETFs that we manage, every time when there is a rebalancing, new stocks that are added or removed, we will make an announcement again on Bursa platform for the particular counter. And on our website, we will also publish those changes. In fact, on a daily basis, you can actually download the list of stocks that the fund or the ETF currently owns. Okay, of course, if you want up-to-date information, follow our Facebook, join our Telegram and all to get, an up-to-date information. Yeah.
Okay. I think we'll post down a comment section later on where to get this information from in Huang Facebook, so that you can actually go there and like the page, so that whenever there's a new information, you guys can actually get it from there.
Yeah.
Right. Okay, there's another question here actually from Masun Singh. Not sure if I missed or not. Maybe he came in a little bit later. How do I know what are the list of stocks that will be listed in this ETF?
The stocks that will be that's in this ETF. So again, it's all in the website.
All right. You are talking about the Bursa Malaysia website, or your
our website. Bursa Malaysia announcement would have it on a daily basis. So for these two new funds, because we are only listing it on the 15th of July, which is next Wednesday, Wednesday onwards, we will be making those announcements. If you want a sneak peek into the top 20 stocks, I can just briefly tell you lah. It's FNN, the 6 stocks that I mentioned. There is FNN in it. Wait, let me just pull it out so that. Okay, Benny, you want to move on to the next question? Let me just pull out my info.
Easy one. Is it Sharia compliant?
No, this is not Sharia compliant. We did not add the Sharia filter in. So companies like Genting, if one day if it gains momentum, it might be included into this index. So it's non-Sharia compliant.
All right. Okay, there's a question here from 𝐏𝐮𝐭𝐭𝐢𝐧𝐠. What's the expense ratio of the ETF and the turnover rate?
The expense ratio, we are, like you can see in this page, we are charging 0.5% management fee per year. Of course, the total expense we won't know because as and when we, the turnover of this particular portfolio happens, we will incur brokerage, transaction within the fund. So it really depends. Of course, in a year where let's say the portfolio doesn't change as often, then the management fee, the total expense could be a lot lower. Otherwise, the fixed cost that we're charging is probably going to start at 0.6, around there, 0.6. And then the variable will be all your transaction costs that we incur as a result of the portfolio turnover. Again, portfolio turnover is usually historical or a look back. So I can't give you any number because we have not started the fund. Yeah.
Yeah.
Okay. Let me give you. Yeah.
Okay. Yeah. Sure. Go on.
Let me give you the names. So the 20 stocks has got Axis, AX REIT, Dialogue, FNN, Genting Plantation, Harta, IOI Corp, KLK, 𝐏𝐮, MISC, Pet Gas, PPB, QL, Tenaga, Top Love. Okay, and the 6 that I added, that I mentioned earlier on. Okay, so these are all the 20 counters, yeah, in this particular portfolio.
All right, so guys, basically the fund chooses the momentum stocks for you guys. So if you want more excitement in your investment portfolio, you can just add it in. And basically, it's the 20 counters, you can actually have an exposure to them with only ringgit, right? The issue price.
Yes, that's right. That's right.
Yeah, so it's actually easier to manage, right? 100 ringgit, you want to put 200 ringgit, it's really up to you, But if you really like momentum, then you should be able to look at this as another alternative instead of picking those stocks, that has this movement on yourself. But there's a question here. I'm not sure whether it is easy to understand because it's asked about risk level 1 to 10, 10 being the highest risk. Will the investor know which stock the fund manager buy?
Sorry, will the
investor know which stock the fund manager buys?
Oh, yeah. You will know what the what we buy because all the stocks that we own in this ETF, it's made available to you on a daily basis. So you would already know if there's any changes if we bought or if we sold. So again, the changes in the portfolio doesn't happen every other day. It only happens at the end of the quarter. So end of March, end of June, end of September, end of December. Okay, so if you want to know exactly what changes has been made, then you need to look at those announcements at the end of the month or beginning of the following month. Yeah. And if you want me to rate this on the risk of 0 to 10, I will say that this is on a higher risk, probably somewhere between 8 to 10, because this is picking momentum stocks, okay? And we know that momentum stocks generally have high volatility, right? So it goes up fast and it kind of comes down at a quicker pace as well. So, but of course, like we mentioned in our earlier slides, if you are willing to embrace this volatility, you can get rewarded over time.
Right. There's a question here from Aaron Chia, because based on the back testing on the index, right? Have you figured out the CAGR or the compounded average returns over the years?
Yes, actually it is since 2005. I think it is at an annualized return of 23%, I believe.
Annualized
since 2005. Return? Yeah, annualized return. Yeah.
Okay. Yeah, so 20%. This is Warren Buffett.
Yeah.
And I saw your slide earlier. The only time that it went down was in year 2018, isn't it? That's when the market
went down was 2008 and 2018. Yeah. 08 and 18. Somehow 10 years.
Right. Still at 10 years, no?
Yeah, hopefully.
All right. Okay, maybe I go for one more question. We'll talk about, the rest of the questions will come back later, because the rest of the questions is quite pertinent in ETFs, like volume and so on and so forth. Okay. Maybe you want to address that later. Yeah. So maybe this one here, I'll show you one more question here. This is from James Edwin. So this is saying that this quarter's tracking is based on last quarter's momentum, not current. Wouldn't it be the investment lead?
Yes. So that in a way, there's a downside of this index because we don't look at it every day. The index provider don't look at it every day, so it's captured every end of the quarter. Okay, and then when it gets plotted onto the point and figure charting, if you go and look up point and figure charting, they kind of erase the time factor out of the chart. So they are really purely looking at the price momentum. Okay, so of course, as and when there is a huge movement, then it gets plotted, or rather, you get the X and the O plotted onto the chart. Otherwise, these are basically we're trying to capture, basically identify momentum at a certain point. Okay, which is end of the quarter. So it is, like I said earlier, right? This is not a black box. We are not trying to predict future momentum. Okay, so if let's say some stocks has gained momentum in between the rebalancing period, let's say we just rebalance this in end of June, right? Let's say August, okay, example. Let's say Penta has run out of momentum, okay? And then suddenly there is another counter that has gained momentum. Then nothing will happen. Penta will still be kept in the portfolio until end of September. And then end of September, the rebalancing happens again. We do the filtering again. And if Penta has, clearly lost its momentum, then it gets replaced with another counter or another stock.
Yeah. Okay. So if you ask me, guys, looking at the stock list, it's not those like penny stocks, the 10 cents, 20 stocks that goes up V-shape and goes down V-shape as well, right? So yes, there is momentum, there is volatility, but it is not like those who actually speculate and buy warrants and this kind of stuff, right? So those stocks are selected, and of course, as a fund manager, they also choose the right stocks, all right? So I mean, it's RM1. You guys can give it a try. As long as there's momentum in the market, you guys are able to actually gain returns from this, all right? Because there's actually one question here is from 𝐏𝐮𝐭𝐭𝐢𝐧𝐠. Why does a fund does not rebalance it every month?
Okay, you know what? If we rebalance it every month, we have actually I think we did ask Nasdaq to rebalance it. But if you take into account the portfolio turnover, if we do it on a monthly basis, and the transaction costs that we incur as a result of it, may be a bit disruptive or maybe on the high side lah. So I think that's the reason why we chose quarterly rather than a monthly rebalancing.
All right.
Because if you think about it, to be honest, the stocks don't just lose momentum over like few days, right? And these are mostly the larger cap companies. So yeah.
So there's a question, actually one more question, maybe we move on. Is this for sophisticated investors? So there's no criteria, right? For this?
Yeah, this one anybody can trade, anybody is free to invest on day one. I hope no brokers will be funny in the market trying to block anybody from investing. If there is, please let us know. Go to our website. We have a WhatsApp number. We have Telegram and whatever channel you want to inform us. Do notify us because we will then take it up to Bursa so that we can clear this for you. But generally, these are not different. These are very plain vanilla as compared to the leverage and inverse ETF. So no sophisticated investors requirement. Okay.
Okay, maybe you can go to the next one because you have one more to go on listing on Wednesday as well, right?
Yeah. Right. So, okay, let's go through the other ETF that we are going to be listing on Wednesday. It's called the TradePlus MSCI Asia X Japan REITs Tracker. So very clearly, this index is owned and developed by MSCI and is REITs. Okay. Now, those of you who love dividends, who love income, this is something that may be suitable for you. Okay, so a very brief introduction as to how REITs work. REITs is essentially a collective investment scheme, or basically what it means is that investors pool their money together, and there is a manager, okay, a REITs manager that uses the money that they pool to buy and manage real estate. Okay, and these real estates could be mall, offices, any spaces, logistic spaces or hotels and apartments. Okay, and as a result of it, they will collect rental income from there, and of course there is also potential growth in their property value, and all this profit are then channeled back to investors as dividends. Okay, so in Malaysia and most of the Asian countries, at least 90% of the profits that they have collected have to be distributed back to the shareholders. Okay. So I'm sure some of you have invested in REITs and you may love REITs, right? So what we're trying to do here is that we're trying to bring the Asia X Japan REITs to the Malaysian market. Okay. Before we go into the REITs, the specific REITs for this ETF, maybe we can take a look at why invest in Asia X Japan REITs, right? So if we were to compare the dividend yield of Asia X Japan REITs versus the developed market REITs, as well as global and US REITs, the white line is actually the dividend yield of Asia X Japan REITs. Okay, so clearly, Asia X Japan offers the highest dividend in terms of REITs, in terms of dividend yield. But of course, some of these developed markets REITs yield have also spiked up recently because of the drop in prices, right? Okay, now how the MSCI Asia X Japan dividend REITs is being constructed is that step number one, okay, all the REITs that are within the MSCI Asia X Japan index is the universe. Okay, there are over 2,542 stocks in this MSCI Asia X Japan index. Okay, so of course we will only pick out REITs from this 2005 universe. Okay, and then step number two, the MSCI, which is the index provider, will then do a dividend sustainability and persistence screening. Okay, so what it means is that they will exclude REITs that has zero payout, that has negative payout ratio, and those who have extremely high payout ratio, maybe some exceptional year, one particular a high payout, that will also be excluded, and those with 5-year negative dividend per share growth are also excluded. Okay, so these are the additional layer that they have put in to screen those REITs. Okay, so once they have screened that. Those that are, not so sustainable per se, will be excluded. Then now, these REITs are then weighted based on their market cap as well as dividend yield score. Okay, so give you an example. Let's say this particular REIT can be big, okay, can be the largest in terms of their market cap. But in terms of their dividend yield score, it may be low. So they don't get a higher weightage, they will get a slightly lower weightage. So they will then, so it is not just purely being weighted based on market cap, but they are based, they will combine the dividend yield score and the market cap before they decide on the weightage for each of the REITs that is in this portfolio. Okay. Now, each of these REITs are then, being weighted, and they will also set a maximum weight per REITs, okay, which is at 10%. Because they don't want to end up having, a very, very concentrated portfolio. That's why they will just cap the weight of one single REIT at 10%, okay? And these weights are then rebalanced quarterly. So over time, if assuming these REITs have done well, the weights of these REITs, right, can actually go above 10%. Nothing will happen. Only on a quarterly basis, it will then be rebalanced to bring the weight back down to 10%. Okay, and then on a semi-annual basis, there will be reconstitution of the index, so it goes through the whole cycle again. Okay, so if we take a look at this particular index, if you take a look at the country allocation, it is quite interesting because despite it's an Asia ex-Japan REITs, but because it focuses on REITs that pays higher dividend, we know that Singapore and Hong Kong pays quite attractive dividend yield, and that's why we end up having quite a significant weightage on Singapore REITs. 70% of the portfolio is actually comprises Singapore REITs. 21% is in Hong Kong. 4% Malaysian REITs, and then 1% Korean. Okay. And if you take a look at the allocation by the industry, retail REITs is at its highest at 37%, followed by office REITs, etc. Okay. Now, this is the index top 5 holdings. So the highest being CapitaLand Mall Trust at 10.2%. Like I mentioned just now, this REITs was capped at 10%, but because of its performance, it has gone a little bit above 10.2%. But later on a quarterly basis, the weights can be rebalanced to bring it down to back to 10%. So these are Singapore REITs, and then you have the Mapletree North Asia REITs at 9.2%. Link REIT, which is actually the largest REIT in Hong Kong, that has a weightage at 8.8%. CapitaLand Commercial Trust, and Frasers Logistics and Commercial Trust. Okay. So why invest into this particular Asia ex-Japan REITs ETF? So for those of you who are REITs lover, who love investing into REITs and receiving rental or dividend yield income, the dividend yield is rather attractive. Based on the current index yield, it is at 5.7%. And we've just, again, we are going to be listing it at 1 ringgit. So with just 1 ringgit, you get access to 28 REITs that is listed in Singapore, Hong Kong, Malaysia, as well as Korea. Okay. Of course, in terms of diversification, if you don't have REITs at all, and you would like to add REITs into your portfolio, then buying this ETF would be a lot simpler. Okay, if let's say your focus is still on, say, picking your own stocks and all, then the diversification for this, you can give it a try. Okay, so what we think is good for investors is that today, if you are investing into these REITs outside of Malaysia, it is quite cumbersome because you need to then open an account in this with a Singapore broker or maybe via your Malaysian broker access the Singapore exchange, Hong Kong exchange, and things like that, and you would end up incurring higher brokerage or transaction costs, right? Because you have to pay double brokerage here and also the foreign markets. So it's easy. It's just on Bursa, listed on Bursa. You just buy it like how you buy any other Malaysian counters or Malaysian stocks. Okay. So this one is rather quick because it's a lot simpler as compared to the momentum strategy. So at the end of the day, we are tracking the MSCI Asia Japan Equity REITs Custom High Dividend Tilted Cap Index, a very, very long name. This was an index which we have requested MSCI to customize for us. And it will be issued at 1 ringgit, standard board lot, 100 units. Okay. The management fee is going to be at 0.5% as well. Okay. And for this particular ETF, we intend to distribute income or pay a dividend on a quarterly basis. So we will just, kumpo all the dividends that we receive from the other REITs, and then on a quarterly basis, we will make payment. However, once we list it on Wednesday, we may not pay in the coming quarter. Okay, so because we may need time to build up the income, we don't want to be end up declaring an income dividend that is insignificant. So what we'll do is we have the option. The fund manager has the option to only start paying income after the end of our first financial year. Okay, but don't worry, it doesn't mean that your income is gone. It will just sit in the cash account of this ETF, and it will be when it comes to the price of this ETF, it will be taken into account the cash that we hold. Okay, so yeah, Benny, let's take some questions for this.
Okay, so where can they find all this information for these two ETFs? Because you see on your website, right?
Yeah.
Which website is this?
Oh, go to our website, tradeplus.com.my. The Afin Huang AM doesn't have this info. We have a specialized ETF website. It's called it's www.tradeplus.com.my.
All right. Okay. Now there's a of course there's a questions that's regarding for ETF in general, but let me just go on to the questions related to the REITs one first. Okay, there's a question here from Tan Seong Kok. What's the difference between this REIT compared to the Public Mutual Asia Pacific REIT Flexi Fund? You have an idea?
I don't have an idea, but to be honest, in the market, there are existing REITs, unit trust fund. I'm not sure whether, I think Public has it, Manulife has it, even Afin Huang ourselves has it. The main difference actually is in terms of the management style. Okay, for those REITs that REITs fund that is managed by the fund managers, those unit trust funds are typically actively managed, which means that the weightage of each of the REITs that they pick could be it's dependent on them doing a valuation, and they basically do their stock picks based on whatever criteria or whatever style that they have. Okay, so it's actively managed on a daily basis. They look at it, and if they don't like it today, tomorrow, they can just buy and sell anything they like. Okay, whereas for this particular REITs ETF that we're listing, they are passively managed. Okay, so Afin Huang, we do not pick REITs that we think it's valuable in terms of a fundamental perspective. We just pick all, or rather, we just mirror whatever MSCI, which is the index provider, puts into their portfolio. Okay, so if you look at it, it's a totally different style. One is actively managed on the unit trust fund side. Of course, it comes with a higher management fee. This one is passively managed. It doesn't get refreshed. The management fee is a lot lower. Okay, so these are the major difference in terms of the style of ETFs as well as unit trust funds.
Yeah, there is a few questions actually. I think maybe some of them are not really familiar with ETFs or even REITs, especially when it comes with the cost, right? The management fee, the trustee fee, and an index license fee. Maybe people thought that they will be charged this fee when they buy the ETF. So maybe you want to explain that to them.
Yeah, sure. So typically, all these fees, management fee, trustee fee, and the index license fee, they are all embedded into the fund, right? Let me give you an example. Let's say, for example, we pull money from everyone, right? Like a unit trust fund. Let's say I raise 100 million. So out of this 100 million that I have, I will use it to buy the REITs, okay, that MSCI puts in their portfolio. So I'll be buying maybe 28 REITs, okay, that they have. And then surely there will be some cash residual. So out of this 100 million, maybe I have a 10,000 ringgit cash in my in the ETF account, okay? And out of this 10,000 ringgit that we have, it will be used to pay all these expenses. Okay, so let's say on a yearly basis, we charge 0.5%. So every day, we will take the NAV of the fund, the value of the fund, multiply by 0.5%, divided by 365 days. So it's on a daily basis, it gets accrued in the fund. Okay, so at the cash, from an accounting perspective, the cash balance gets reduced. Okay, bit by bit on a daily basis. Okay, same goes to the index license fee and the trustee fee. Whatever fee that the fund has to incur will be deducted from the cash portion or the cash account of the fund. So these are not charges that you have to pay in addition, or rather, not I wouldn't say in addition. I would say that these are not the charges that you pay outside of the fund. So you don't have to top up these fees to the broker or to us directly. So when you buy into ETFs, you basically just pay your broker brokerage fee and all the clearing fee, etc. Stamp duty is still waived up until end of this year. And then on a yearly basis, you'll be charged all this management fee. So it's all taken out from the fund. So which means that the price that you see when you sell your ETF it has been taken into account. All these fees that you're supposed to pay, it has all been taken off. Yeah. So whatever that you receive is net.
Okay. Yeah, there's actually a question how to buy ETFs, but if you go, I think there's a user actually went to TradePlus.com, TradePlus.com.my. You basically have to scroll to the bottom. There's actually information there on the 2 new ETFs, and these ETFs will only be listed on the 15th, which is on this Wednesday, right? Yes. So you can only buy and sell them like any other stock. Like you can just buy like any other stocks on your broker platform, whatever trading platform they are in. So you'll be able to see the code there. Just scroll on to tradeplus.com.my. You can see this information there. If you want to know about, whatever that 𝐷𝐿 has been explaining here, the facts and so on and so forth, you go there and get the information. But to buy them is like buying any other stock. So you have to go to your trading platform on Wednesdays. All right? Yeah. On this Wednesday, not on Wednesday. So hopefully that you guys
after Wednesday, then you can buy like any time you like.
Yeah, after Wednesday you can buy anytime. So Wednesday, I hope that you are able to go in and see how the price perform. Get in there, and maybe you should just try to actually buy these ETFs. So you want exposure on REITs, not just Malaysian real estate, but you want to go the Asian market. So please do. Exposure is also 1 ringgit, right?
Yes, 1 ringgit. Yes.
All right. Okay. So guys, stay tuned on Wednesday. Make sure you are there ready and support 𝐷𝐿 over here to also support here on these 2 new products. And I think it's quite exciting because this is really 2 products that I think many people will be looking for as well. Okay, now I'm going to go to the question on. There's a question here actually from 𝐏𝐮𝐭𝐭𝐢𝐧𝐠. Would the FX be hedged, or what is the base currency for this ETF?
So of course, for the Malaysia momentum one, that one is ringgit lah. No hedging required. For the Asia REITs, we won't be hedging, so there's no FX hedging. We will just take on the currency risk. So in the event when Sing appreciates against the ringgit, then there will be some currency gain that we get, that you may see from the price appreciation of this particular ETF.
Okay. Does the fund include Malaysian REITs as Malaysian real estate as well, or just purely outside of Malaysia?
No, it includes, but I think because when they rank it according to the dividend yield, only 1 or 2 Malaysian REITs got included.
Okay. So it's ranked by dividend yield, which you have just explained earlier. And guys, if you missed this out, you can view the recording again after this session. Right? Maybe a few minutes after this session, you should be able to view the whole thing again. All right. Okay, there's a question here by Chua Di Wei. Do we get dividends and whenever the REITs announce it?
Not whenever this REITs announce, because we have 28 REITs in this portfolio, and all of them pays different the dividend at different timing. So like I said, what we'll do is we'll just accumulate all this dividend that we receive from those REITs that we invest, and then we will then on our side give it out on a quarterly basis. The aim is to give it out on a quarterly basis, but it is still subjected to basically the income, because we don't want to end up, let's say for example, this particular quarter, maybe there are not that many REITs that pays dividend during that particular that falls between that quarter. Then we don't want to end up paying something that is not so significant. So we will accumulate it over a year basis, from a year from now, and then we will start paying on a quarterly basis.
Okay. Okay. If you wanna share with them, what are the Malaysian REITs that's being included in there?
Okay. Hang on. For that, I'll need to check. Maybe my somebody from my team can just reply that question. Yeah. I think it's, if I'm not wrong, I think it's YTL and Axis, I think, if I'm not wrong. I could be wrong.
Okay, maybe you guys, I think your guys are there to also answer some questions.
Yeah, they're watching it, so they can.
All right, awesome. Okay, again, back to liquidity. Maybe you want to address this once again. This is encompass all. There are a few questions, so I'm just address this question as well.
Yeah. Okay. Okay. Liquidity of ETFs. Okay. I've said this many times. Everywhere I go, without fail, this same question comes up. Okay. Today, all of you are very familiar, right, with how you measure liquidity for shares, right? Basically, you just flip to the trading volume column, and if it's high trading volume, then this stock is liquid, right? But you will notice that ETFs in Malaysia, because it's not as popular as shares, you notice that sometimes it doesn't get traded, okay? And sometimes the trading volume is really light, okay? Sometimes maybe, if it's really very quiet, it could be 0, it could be 1 lot traded, it could be 10 lots, etc., right? So we actually have market makers that is behind the scene to quote market make for this ETF. So they basically are the ones that commit to buy and sell. So at any point in time during the trading hours, if you log on and search for this counter, you will notice that there is surely one person that is queuing a bid, and there is one person that's queuing the offer, right? Bid and ask. So essentially, these are our market makers behind the scene, putting up those quotes for you, okay? So these are the price that usually tracks the fair value of this ETF, okay? So it doesn't really go according to supply and demand, but it really goes in accordance with the fair value of the NAV of this particular ETF. So again, for ETF, try to ignore the fact that, the trading volume is low, because we actually have market makers in place. If you don't believe me, just log on to your trading platform on Monday, right, tomorrow. And if you filter all the ETFs, right, you will realize that surely there is a bid and ask, okay? And these bid and ask are put up by the market makers. So it's different, if you look at shares, right, if it is really illiquid, maybe you see nobody queuing at all. Sometimes, for example, if you go to the lead market, right, kosong one, nothing. Don't even have a bid, don't even have an ask, okay? Or you have a bid, you don't have ask. But for ETFs, surely there is a bid and there is an ask, okay? Of course, some of it, the market makers may have their own market making timing, because they have to track the underlying index, right? So for example, our China ETF, we have a China ETF. Our China ETF, the market maker only starts market making at 9:30. Okay, so between 9 and 9:30 is kosong one. Why? Because the Hong Kong market is not open. So they can't buy and sell anything in the Hong Kong if they need to hedge, right? So as a result of it, they will only start market making at 9:30. Okay, so between 9 and 9:30, it'll be empty lah. But that time, if anybody is trying to buy and sell, then that particular timing, right, is really based on supply and demand. You might get caught buying it at a premium or at a discount.
All right. Okay, there's a question here by Steven. Maybe you wanna share this because they asked whether the Affin Hwang ETF scores are all start with 082. But this one start with 083, isn't it?
383. No, actually, all these are given. These codes are given by Bursa.
Yeah.
So it's basically, whoever files for ETF launch, it just follows a sequence.
Okay.
Yeah.
So it's nothing to do with the number is determined by Bursa Malaysia.
No,
Right?
but all ETFs starts with the 08 code.
08 lah, not 082.
Yeah. Not 2. I think so. It's 0820. I think it probably starts from 0820 and then goes all the way to 30. I think it stops at 35 lah. Yeah. Then now the 2 new ETF is 36 and 37.
All right. A question from Shamim. The risk on the REIT ETF should be much lesser than the momentum ETF, I presume.
Yes, I believe so. Of course, I won't be able to give you any fixed number, but generally the REITs market is less volatile. But even so, when you get caught in a crisis, everything just plunge. Yeah.
Okay. We go on to the next question. Okay, the bid and ask, basically you have to wait. And normally, what's the bid and ask for, let's say, in Hwang, what the market makers normally, what's the spread like?
I will need to check with the market makers, but generally it should go around maybe 2-3 ticks. I'm hoping that they will quote within 2-3 ticks. I'll be talking to them to confirm. I think for the China ETF is at 3 ticks. So for the Malaysian market, maybe they can quote a bit tighter lah. So maybe between 1 to 3 lah. Yeah.
Yeah. So guys, when you go to your trading platform, you go and look at all the ETFs, you should be able to see the bid and ask because at different times the spread will be different. So it's very difficult to determine the fixed bid and ask. So you really have to go and look at it. But normally it's like what Lee Chu says, I think about 2 to 3 ticks lah, price difference. Yeah. Okay, now, another question, new one just came in from Joe Liao. What's the selection criteria for us to select or compare the ETF in market? Wow.
What is criteria to select or compare? I think first of all, it really depends on what you are looking for, right? Because customizing or a portfolio is very different for each and every one. Everybody has got their own risk appetite. Generally, I would say personally, I have this belief that in the Malaysian market, we are not as efficient as the US, right? Because in the US, people just talk about, I don't have to bother paying fund manager, just buy the S&P 500 index. But if you do that in Malaysia, if you buy the FBM KLCI, you're probably not getting anywhere, right? You're probably better off paying a fund manager, even though higher fees, but you get better returns, right? In terms of outperformance against the typical benchmark. So that is why we bring the Malaysia Momentum ETF because we think that the FBM KLCI it's not that interesting, but the Momentum ETF has the potential to outperform the KLCI, right? To be honest, the universe in the entire Malaysian ETF space is not huge, right? So, for example, if you're looking for China, there's basically just 2 China ETF. Affin Hwang's TradePlus S&P New China and the CIMB China ETF. Okay, and then if you talk about gold, we have a gold ETF. We don't have a competitor, right? So that's why in ETF, there isn't really much for you to compare, if you ask me, right? In Malaysia, so But if you were to stack this up with a foreign ETF, okay, let's say if you're looking at China ETF and you think that, you know, our spreads are too wide, etc., you want to go for something else outside of Malaysia, then the question is, you know, it's entirely up to you. We're not saying that it's not good. It could be cheaper over there in terms of expense ratio and all, but the convenience, it's, you know, not something that you can get. So generally speaking, I wouldn't even, you know, I know in the US, if you read a lot of these materials, they will tell you that you should look at their TER, you should look at, you know, all these factors. But to me, I value convenience a lot more than all these fees. As long as I'm not being charged excessively, I'm fine to pay a little bit higher, because I don't want to end up, you know, opening an account in the US market and then having to trade the ETFs there. I might as well just choose something that is convenient for me. Okay. Over time, as the ETF market develop and mature, all these fees, the total expense ratio will eventually come down, and you eventually benefit and have some cost savings from there. So if you ask me again how to compare and select, I would say, you know, you have to decide for yourself what theme you like, what products you like, or what sector or what region you like, and then, you know, see if there's any comparable unit trust products and also ETF, and then you make your selection from there. So I don't have a straight answer for you, but if you need further assistance, you can call us. We have ETF specialists who are ready to talk to you. Yeah.
All right. Okay, there's a question from Tan Seong Kok, because I think you did a presentation to introduce the FANG 2X 2x leverage.
Wow, that one has done so well.
Yeah, so the price is almost doubled up, right?
Yeah.
So Tan Seong Kok now is asking whether are they going to expect a similar return for the momentum ETF?
Oh, no. I think the US market, okay, of course, bear in mind, the FANG 2x leverage is a leverage product, okay? So it gives you, it kind of doubles up your return, right? But for this Malaysia momentum, we know that the US market is just crazy, right? Things just keep going up, and their returns has kind of always been a lot higher as compared to the Malaysian market. And especially if you look at the recent 2 years, right? It's just so, I would say. I would say you cannot expect the same returns, but you can expect this to be a decent returns, comparable to what some of the unit trust funds in Malaysia could potentially give you. Yeah. However, of course, if these are also suitable for people who don't really have time to manage, of course, if you have all the time in the world to go and, you know, do your own homework, assess which stocks to buy individually, then of course maybe you do better, right? But you know, in short, I don't think this will do as well as the FANG ETF. I hope you have bought that and benefited from it.
Yeah, it's really wild. I mean, US, it's a leverage, so that's why you get the kind of returns, right?
Yeah.
Okay, I think there's a question here. Lenny has been asking this question a few times here. I think she's wondering, you know, whether the ETF, the fund managers, as being a corporate, pays more ETF, more tax than as a retail investor.
For which I don't think so. No, because it depends on which market we invest, right? For instance, if we invest, let's say the Malaysian momentum invest into Malaysian stocks, in Malaysia, there's no capital gain tax, there's no dividend tax, income tax. So we wouldn't be impacted. Even for REITs and all, it's negligible. I think it's the same.
Right, there's a question here from Wan Hui Lok. He said, try buying ETF once via online trade, but the platform showed message suspended from buying stock at branch level. Check with dealer.
Oh, okay. I need to know which ETF you tried to buy, because okay, very unfortunately, my gold ETF, our gold ETF, is cash upfront. There's cash upfront requirement. So if you're trying to buy gold ETF, you get suspended. Okay, as in the counter is suspended, you need to call someone, the broker, very mafan, okay? You have to call the broker will then open up and allow you to trade, okay? Other than that, other than gold, the FANG ETF, the leverage and inverse ETF, also has additional requirement. You need to be sophisticated investor. You need to sign some additional declaration. If you're not sophisticated investor, there are still other qualification that you can qualify yourself to trade, but it's just that you have to sign some form before you are allowed to go into it, right? So before you're allowed to invest into it. So as a result of that, you get suspended also. So the only thing that you probably won't get suspended is also the new China ETF and also these two upcoming ones. So like I said, if you're not trying to buy gold, you're not trying to buy leverage and inverse, if you have an issue, just WhatsApp us or email us. We will help you clear this out with Bursa. Okay. Yep. So this is just a slide to showcase the current ETFs that we have for your info. Yeah. Are there any other questions?
Yeah, maybe go. We have time until 9:30, so we maybe consider 2 or 3 more questions. Okay, there's a question here from Jason Bowie. When is it considered the end of his financial year for the TradePlus MSCI Asia X Japan REITs tracker? Is it 15th of July, 21?
No, I think it's March, 31st of March. It's in our prospectus. Yeah, so it's 31st of March. Okay, back to the REITs question that the MSCI REITs has. It is the Malaysian REITs. There are 4 actually. IGB REITs, Sunway REITs, Axis REITs, and Pavilion REITs. These are the REITs that are in the MSCI index at the moment.
All right. Okay.
Yep.
Nice. Okay, now one more question here we have from Sim Wenki. REIT ETF would be the 10 Singapore withholding tax will impact the return?
Yes. Yes, it would.
Okay.
Yep.
Let's see if we have any other questions. I think that was the last, there's the newest question that I have there. All right, I guess, it is time. I think you guys already spent with us for 1.5 hours. Thank you, Lichu, so much for explaining this. I wish you all your success on Wednesday, the 2 launch. Guys, so on Wednesday, you should be able to see the ticker up, right? And you should be able to trade them like any other share. So there's no additional requirement like the inverse or leverage ETF, right? So you can just buy them without any problems. And again, if you buy Afin's ETF, these 2 new ETFs, and you are not able to get through, Lichu has offered you to actually contact a team, if you have any troubles buying those ETFs, all right? Yeah. So, okay, now before we end, I just want to do a short announcement. Tomorrow we have our Technical Monday, so tomorrow we also do our market updates. So hope that you're able to join us tomorrow. If you have any questions based on, questions on stocks that you look at based on charts or technical analysis, or maybe even point and figure, since you guys are asking what is point and figure from Tom Dorsey, right? So maybe I explain to you what are the reversals and what the momentum is all about based on the point and figure charting, right? So at least you have an idea. And I also give you a link. I think I'll give you a link in the comment section. You can actually look at the way or the methodology that he uses to track the index, right? So you have information there as well. Okay, so with that, thank you very much for joining us tonight. I hope that today is beneficial for you guys and gives you more idea about ETFs and REITs. And please do, continue to support REITs like Lichu has mentioned. Although the transactions are not a lot, but the market makers are always there to make sure that the trades can be done. All right. And if you guys have a lot of trades that you want to do, you can even, contact Lichu and she can actually arrange with the market makers if you really want to buy or sell in bulk in a high volume. All right. Okay, so
guys,
thank
you. Scenario I buy from you, if you really want. I mean, the market.
Yeah, I guess one of the things that people are running, like, the risk and so on and so forth, it's only 100 ringgit. You can give it a try, 200-300 ringgit, just give it a try, and at least you can track them, right? So you want to see how REITs are performing in the Asian market, just buy the REIT, you can track them, okay? See whether they are momentum counters. You know what? Actually, you have a clue as well, right? Whenever they actually change the criteria, the portfolio, and you can see that these stocks are coming in, that means these stocks are in momentum. So you can even look at these stocks and buy them yourself, right? Directly yourself. Okay, so you can do that as well, right? So I think it's a good way to track as well. So please do join us on Wednesday. Please go in and see that 2 new tracker 2 new ticker in your trading platform. and you should be able to start investing in these two this Wednesday. All right. So Lee Chu, thanks again for joining us tonight, and we hope to see you again as
Okay,
usual at
welcome.
lightning. And now we cannot guarantee that it's going to double up like the Fang Plus XL, right? But hopefully, I think the momentum of the market is quite strong. Sorry?
I think as long as for momentum, I think as long as the market has momentum and not just being very sluggish and flattish, then there is a chance for outperformance, I would say. Yeah.
Okay. All right. So thank you very much for joining us. Have a good evening, and we'll see you again tomorrow at 8 p.m. Thank you, Lee Chu.
Okay. Thank you. Good night. Bye.